Today we're going to talk about stop and stop limit orders. Now, if you haven't seen the market and limit orders videos, then go watch those now because this video builds upon those. So today we're going to talk about first how we protect our positions with stop orders. Then we'll talk about the mechanics of stop orders, then the risks of stop orders, and I will do demonstrations throughout the video. So how do we protect our positions? Well, if we're long a security, such as we own a stock, for example, then we will use a sell stop order in order to sell as the price is dropping. If we're short, meaning we borrowed the stock and sold it to someone else, then we'll use a buy stop to buy the stock back as the price increases. Now, both of these actions close our position and reduce risk, meaning reduce losses. You really only need to know the long right now. In a future video, I'll go over short, and it'll make more sense. Let's review market orders real quick. A market order executes at the next available price. So they're pretty simple. And then reviewing limit orders, a buy limit is specifying the highest price we are willing to pay for a security, and a sell limit order is specifying the lowest price we will accept for what we're selling. Now the mechanics, let's say we are selling, and let's say the market price is $100. If we want to sell when the price drops to 90, if we place a sell limit order at 90, we're saying I'm willing to sell my shares at $90 or better, and that will execute immediately because $100 is better than 90 when you're selling because it's more. We don't want to do that. We want to place a stop order instead. So if we place a stop sell order at 90, we're saying I want my sell order to be triggered when the price is 90 or less. So it basically puts a hold on the sell order until it hits the right price, which is our stop price. So let's get deeper into this and compare the two. So a stop order triggers a market order at the stop price, while a stop limit order triggers a limit order at the stop price. That's the main difference. And it's pretty simple when you think about it that way. Now, if we do an example, such as a sell stop again, and again when the market price is $100 and we want to sell when it drops to 90, I will show you what that looks like for both stop and stop limit. If it's a sell stop order at 90, then we're saying to the market, I want to trigger a market order when the stock price drops and trades through $90. And so that means if the stock price drops and trades through $90, then we will initiate a market order to sell, and that will sell at the next available price. Now, if we do a sell stop limit order at 90, we're saying to the market, I want to trigger a limit order to sell at 90. And so that means if the stock trades through $90, that will initiate a limit order with a different price, of course, or the same, and that will sell at the limit price or better. So you're just initiating a limit order. So if we do a sell stop limit, market price is 100, we want it to drop to 90, we need to specify both a stop price and a limit price. So if we say the stop price is 90 and the limit is 89, we're saying to the market, I want to trigger a limit order to sell at 89 or better when the price trades through 90. So if the price drops and trades through $90, so it goes to 90 or less, it'll trigger a limit order to execute at 89 or better. So let's do an example. I have an ETF here, GXC, last traded at 113.29. It's actually in my account, and I will show you how to do a stop sell order. And there are multiple scenarios in which it makes sense to use this. we could sell short with a sell stop as the price goes down, or we could sell a long position as the price goes down in order to get out of the position. So let's say GXC was dropping and I didn't want it anymore, wanted to limit my losses. That's when I might use this. And remember, just a regular stop order, it triggers a market order at the stop price to execute at the next available price. So we're going to sell. We'll put in a quantity. I'll put 2. We're going to do a stop order. And I'm going to make the stop price 100 and good till canceled. That means it expires in 60 days. So if we review this order, you'll notice here a warning. Stop prices do not guarantee execution prices. A stop order may be triggered by a short-lived dramatic price change. So it could sell by dropping to 100, and maybe it comes back up to 113 right away, and so I shouldn't have sold, for example. That can happen. And so you'll see the order here. It's ready to go. It's underneath the current market price, and it will sell if the price drops to 100 from 113, and that will initiate a market order to execute at the next available price. So it could execute at any price, actually. Now, another example, let's do a buy stop, and let's assume the market price is 100, and we're trying to buy if the price rises to 110. If we just do a normal buy limit at 110, we're saying I would buy for 110 or better, and that would execute immediately because 100 is better than 110 when you're buying, because it's less. So we don't want that. So we're going to do a stop order instead. If we do a buy stop at 110, then the market order to buy will be triggered if the price rises to 110. And this will execute at the next available price. Now, if we do a buy stop limit, the stop could be, for example, 110, and let's say we make the limit 110 as well. The limit order is triggered if the price rises to 110, and then the limit order will execute if we can get 110 or less. So if the price is 110 or less, that'll execute. Another example here, let's say Apple, the market price is 100, and we want to buy as the price goes up again. And the reason I'm doing this again, by the way, is just because I know buy stops can normally be confusing for people. And so if we do, like, say, a buy stop limit again, the stop price could be 105, the limit 107. This will trigger a limit order if Apple trades through 105. The limit order will execute if we can buy for 107 or less. And here we have Amazon, last traded at 3,421. It's up really high today. And I'm going to show you how to do a buy stop limit. Forgot to write stop there. That's okay, we're doing stop orders today, so it'll be obvious in a minute. And what we're looking at here is a recent uptrend in Amazon's price. So here's the uptrend I just outlined with an arrow. Now we could use a buy stop to close a short position. So if we were short Amazon and we didn't want to lose any money or wanted to limit our losses, we could use it then to buy our shares back. Or since we see an uptrend, we can actually just hop on the trend by buying with a stop order. And so we'll do it at this 50-day simple moving average. So if it reaches that point, maybe we'll see a breakout, and we'll try to hit that breakout. And so we'll buy one share because Amazon's expensive, and we will do a stop limit order. And so we have to specify a stop price first. We'll do 3,463, and then I'll do a limit price of $2 more to give us a small bit of breathing room. But if the price is rising dramatically, then it might not go through the limit order. And so the limit buy at 3,465, that will be triggered if the stop price is traded through, which is 3,463. And so I'm going to review this order, and you'll see here a warning that this enter will be entered for the next standard market session. Stop orders can only be used in the standard market session, so that's something you have to remember when using these. They can't protect you in the extended hours. And then we'll place the order, and you'll see the order there in the bottom right hand corner. We'll pull up our graph here, and you will see the order sitting there waiting for the price to come up to 3,463. Once it hits that or higher, it will initiate my limit order, which will only execute if we can get 3,465 or less. So just to recap that, at 3,463, the limit order will be triggered, and that will execute only if we can get the limit price or better. So it'll buy if we get 3,465 or less. Now, these can be used for more than just protecting a position, as we just kind of showed you with that Amazon order. We can actually use them to hop on a price trend when we're trading in the short term. And trends are super important when we're trading with a short time horizon. And so before, just to recap this one more time, I said we could use a buy stop to close a short position and a sell stop to close a long position. But now I'd like to add that we can create a long position with a buy stop when the price goes up and create a short position when the price goes down. So here, just a sell short example, Apple market price is 100. We want to sell short if the price drops to 90. We don't have it in our account right now. So we could put a sell stop limit, the stop at 90, limit at 85. It'll trigger the limit order if Apple trades through 90. So if it drops to 90, the limit order will sell and execute if the price is 85 or higher, and we'll be short. So let's go through the risks. In a fast-moving market, and let's say we're selling, for example, let's say the price is moving down really fast. The market order after the stop could execute at a price way less than the stop price. As an example, the sell stop might be at 90, but maybe the market order executes at 70 because the price moved down so rapidly your order didn't execute until 70. And the same goes for a stop limit. There's also a risk. If the price is moving down really fast again, and let's say we're selling, the limit order may not execute at all. And so for a sell stop limit, for example, if the stop's at 90 and the limit's at 85, maybe the price drops from 90 to 70. And since the limits only sell for 85 or higher, then it might not go through. So here's GameStop, GME. And we have a 1 minute chart. And here's a candlestick. Each of these represent 1 minute right now because it's a 1 minute chart. And we'll see on this candlestick here for this minute that it opened at that minute at $204 and it closed that minute at $197. So let's say we place a stop sell order at $202, for example, when it was at 204. This might execute the market order, so it'll initiate the market order. Maybe it would execute at 197. And so that, although only a $5 difference, that's kind of mild. Well, okay, that's actually a lot, but it might seem like a small amount. It could even be higher than that in a crazy market. It could be way higher than that, the difference. So be careful about that. And we have GameStop again, another minute chart. Now I'll show you a stop limit risk. So here's another candlestick. It's a minute candlestick. It opened for that minute at $216. And it closed for that minute at around $225. So that's a $9 increase during that minute, which is a lot. If we placed a buy stop limit, and if we did the stop at 216, and let's say we did the limit at 219, this price is moving up super fast, $9 in a minute. So the stock going up so fast, it might initiate the limit order, but then the limit order might not execute if the price is above 219 by the time it's your order's turn. So it might not execute at all. So that's the risk to stop limits. But the biggest risk to these orders is if the price changes significantly during extended hours trading, so the after hours and pre-market, you could be screwed because these don't activate during extended hours. So we have Amazon again, and we're going to go ahead and go over the standard market session. That is from 9:30 to 4 p.m. And that's the time that these stop orders can execute. So we have right here the 1 day. So this is the close of 1 day. And then we'll see the price is $3,600. And so this is the close at the bottom there of the candlestick. And here we have the open of the next day. And you'll see there's a giant gap between the two. So that's the extended hours trading session, where a ton of trading occurred, clearly. And our stop order, if we had one to sell, for example, that would not have executed during that time. And so we'll see that the price here is $3,600, and the price here is about $3,350. So during that time, you could have lost a lot of money if it didn't sell. So that's something to be aware of. And anyway, thank you guys for listening today about stop and stop limit orders. If you have any ideas of videos you want me to do, please put them in the comments. I'd love to do them for you. And if you have any questions as well or any constructive feedback, give that to me as well.